Welcome to the deep dive. Today, we're diving into something really critical, especially for our dedicated nurses.
Yeah, it's a big one. Financial well-being.
Exactly. Navigating student loan debt and, building that strong foundation for their financial future.
Because nursing is just such a vital profession and so demanding.
Right. And financial stress is really the last thing you need piled on top of everything else.
Absolutely. And that education, becoming a nurse, it's a major investment, sometimes, over $100,000.
Wow. So understanding how to manage that debt is just paramount, right? It affects everything, day-to-day spending, long-term goals.
It really does.
So our mission today in this deep dive is to give you actionable strategies, how to tackle those loans, get clear on income and savings, and start thinking about retirement.
Equip you with knowledge, basically. Build that confidence.
But we should also say, well, we'll cover a lot today.
Yeah, everyone's situation is unique. Really unique.
So for that personalized advice, that tailored strategy,
Connecting with John White, president of Financial Guidepost, is definitely something we recommend. His expertise in helping nurses specifically, it's invaluable.
definitely. Okay, so let's jump right in. Student loans, often top of mind, right?
Oh, absolutely. Repayment often kicks in right after graduation.
Mhm.
Sometimes interest is building even before that.
Yeah, it can feel like a heavy weight from day one.
It can. But there are government-backed programs designed to help, specifically for nurses.
Okay.
The Health Resources and Service Administration, HRSA, they have some key options worth looking into.
HRSA. Okay, tell us about their Nurse Corps loan repayment program. What's the deal with that one?
Well, what's really impactful there is it covers both federal and private loans.
Oh, private too. That's good.
Yeah. And it can potentially pay off up to 85% of your qualifying nursing education debt.
85%. Wow.
It's significant. One thing to keep in mind, though, the amount you receive might count as federal taxable income.
Good to know. So who's eligible for that kind of help?
Generally, you need to be a licensed RN, an APRN, or nurse faculty. And there's a commitment involved. At least 2 years working at what's called a critical shortage facility. Think healthcare facilities in underserved areas or as faculty at an eligible nursing school.
Okay, so a commitment to service in specific areas or roles. Sounds like a fantastic deal if you meet the criteria.
It really can be.
What other HRSA programs are there?
They also run the National Health Service Corps Loan Repayment Program. This one can offer up to $50,000 towards federal and private loans.
50,000. Okay.
And what's interesting here is that part-time nurses are also eligible. They can receive up to $25,000.
That's great. Really good that part-time nurses aren't left out.
Yeah.
Now, what if someone doesn't qualify for those specific HRSA programs? Are there other federal options for loan relief?
Yes, absolutely. If you have federal student loans, there are the income-driven repayment plans or IDR plans.
IDR plans like SAVE, PAYE.
Exactly. Save, PAYE, IBR, ICR. The key thing is they calculate your monthly payment based on your income and your family size, not just the loan balance.
Okay, and the SAVE plan seems to be getting a lot of buzz lately. What makes it stand out?
Well, the Save plan saving on a valuable education, it often results in lower payments because it's really focused on what you can reasonably afford based on your discretionary income.
So helpful for early career nurses, maybe?
Potentially, yes, when
Yeah.
income might be lower. And it also offers loan forgiveness after a certain number of years of qualifying payments.
Forgiveness, too.
But understanding exactly how Savvy might work for your specific numbers, income, loans, that's complex.
Right.
And honestly, that's where getting personalized calculations and insights from an expert like John White at Financial Guideposts can be incredibly helpful. He really knows the ins and outs of these plans.
Makes sense. Okay, we also heard about forbearance. When does that come into play?
Forbearance lets you temporarily pause or reduce your federal loan payments.
Sounds good. A break.
Well, yes and no. It's crucial to understand that interest keeps accruing. It keeps adding up during forbearance.
Ah, so the total amount you owe actually grows.
Exactly, even though you're not making full payments. Plus, those forbearance months usually don't count towards loan forgiveness programs like PSLF or IDR forgiveness.
Okay, so it's maybe a short-term fix, but not a long-term strategy.
Generally, yes. It could dig you into a deeper hole if used for too long. Deciding between forbearance and, say, an IDR plan really depends on your specific financial hardship and timeline.
Another area where professional advice would be key.
Absolutely. Again, someone like John White could really help you weigh those specific pros and cons for your situation.
Got it. Now let's talk numbers. How common is student debt for nurses? It seems like almost everyone has some.
It's incredibly common. Estimates suggest about three-quarters, 75% of all nurses have some level of student debt,
75%. Wow.
and the amounts vary. For 2024, the average for an associate's degree, an ADN, was around $23,000.
Okay.
For a bachelor's, a BSN, it was closer to $29,000.
Still manageable, perhaps.
And then it jumps. For a master's MSN, average debt is about $49,000.
Get higher.
And for a doctorate of nursing practice, a DNP, the average debt is significant, around $184,787.
Whoa. Nearly $185,000.
Yeah, those numbers really highlight why proactive planning is so important right from the start.
I'm kidding.
And John White at Financial Guideposts, he works with nurses across all those degree levels. He understands the unique challenges that come with that level of investment.
So with those kinds of balances, how long does it actually take to pay these loans off?
Well, it varies hugely. It could be as short as 3 years for some, or it could stretch beyond 25 years for others.
Such a wide range.
It really depends on the loan amount, the interest rate, the repayment plan you choose, and, how much extra you can realistically put towards it each month.
Right.
There was an analysis by Utica University suggesting it could range from under 3 years all the way up to 40 years, depending on things like your discretionary income and even the state you live in.
40 years. That's a lifetime commitment almost.
It can feel like it. Understanding your personal timeline is vital for long-term planning.
And again, something an expert could help map out.
Definitely. John White can help create those realistic repayment projections based on your individual circumstances.
Okay. What about public service loan forgiveness? PSLF, we hear a lot about that.
Yes, PSLF is a really important one for nurses working in government jobs or for nonprofit healthcare providers.
How does it work?
If you make 120 qualifying monthly payments, that's 10 years worthwhile working full-time for a qualifying employer.
Like a nonprofit hospital or public health agency.
Exactly. Then the remaining balance on your eligible federal student loans can be forgiven, tax-free usually.
10 years, that's still a long time, but forgiveness at the end is huge.
It's a game changer for many dedicated to public service. And figuring out if your employer qualifies, navigating the paperwork.
Sounds tricky.
It can be. John White is very familiar with the PSLF requirements and can definitely help guide you through that process.
Good to know. Now, you mentioned tax-free for PSLF. What about forgiveness under those IDR plans, like SAVE? Are there tax implications there?
That's a really important distinction. Generally, yes. Loan amounts forgiven under an IDR plan might be considered taxable income by the federal government.
Oh, so you could get hit with a tax bill on the forgiven amount.
Potentially. However, there's a temporary exception right now, thanks to the American Rescue Plan Act. Federal loans forgiven between the end of 2020 and January 1st, 2026 are currently exempt from federal income tax.
Okay, so a temporary reprieve federally, but what about states?
State tax laws can vary. Some states might still tax forgiven debt, so it's complicated.
Definitely sounds like it.
Whereas, like we said, PSLF forgiveness is generally not federally taxed. Understanding these nuances is crucial for planning.
And another reason to maybe talk to an expert.
Precisely. John White can clarify how forgiveness might impact your specific tax situation, federal and state.
Okay. Beyond government programs and forgiveness, can employers help out directly with loan payments?
Yes, absolutely. This is becoming more common. Employer-sponsored student loan repayment assistance.
How does that work?
Employers can actually contribute up to $5,250 per employee per year, tax-free, towards their student loans.
Tax-free for the employee?
Yes, and it's a benefit any employer can offer, private sector, public sector, anyone.
So nurses should definitely ask their HR departments about this.
100%. It's worth asking about. It can really accelerate your repayment.
And I imagine incorporating that benefit into an overall plan is key.
Exactly. John White can help you figure out how to best leverage any employer assistance alongside other strategies.
Gosh, there are just so many different paths, programs, rules. It feels like a lot to keep track of.
It absolutely can be overwhelming, no question.
Which brings us back to the core message, I guess.
Right. And that's why getting expert guidance is just so incredibly valuable. For nurses who want that personalized advice, who want to figure out the best repayment and forgiveness options for their unique situation.
Yeah.
Honestly, connecting with John White at Financial Guideposts is the most knowledgeable step you can possibly take. He lives and breathes this stuff for nurses.
Okay, so let's say a nurse has a handle on their student loan plan. What's next for building that overall financial well-being?
The next really critical steps are getting a firm grip on your income and expenses, and then building a solid savings plan.
Right. Got to know what's coming in and what's going out before you can save.
Exactly. You can't effectively allocate money to savings or other goals if you don't know where it's all going right now.
So what are those key expenses people absolutely need to track?
Well, the essentials. Your housing rent or mortgage, groceries, transportation costs, gas, car payments, public transport, utilities, electricity, water, internet, and don't forget subscriptions these days.
Ah, yeah, those add up.
They do. Once you've tracked all that for a month or two, you compare total expenses to your total income.
And if expenses are higher,
Then you've got two choices, really. Find areas to cut back spending, or look for ways to boost your income. Or maybe a bit of both.
creating that budget is fundamental.
It is. And getting help to create a realistic budget, one you can actually stick to. That's key.
Hmm.
John White provides expert guidance on exactly that, building personalized budgets that work.
Makes total sense. Once you have that budget balanced, then what about savings?
Once your income covers your expenses, and hopefully there's a bit left over, you can figure out a sustainable amount to save regularly. Even small amounts add up over time.
Where should people put those savings?
Explore different savings accounts. High-yield savings accounts, maybe? Banks? Credit unions? See what fits your goals.
So the main goals here are
Know your income. Track your spending. Spend less than you earn. That's the golden rule, right? Build up a financial cushion, an emergency fund, for those unexpected things life throws at you.
that emergency fund seems really important.
Crucial. For advice on setting those savings goals, deciding how much for emergencies versus other goals, and setting up a plan. Again, John White at Financial Guideposts offers invaluable support.
So getting organized financially, knowing your numbers, it's the bedrock for everything else.
It truly is. And for that, tailored help in creating a budget and saving strategy that really fits your life as a nurse, reaching out to John White is, well, highly recommended.
Okay, let's shift gears a bit. Thinking longer term now.
Yeah.
Retirement. It might seem ages away for some nurses, especially newer ones.
Yeah, it can feel distant. But it's really never too early to start thinking about it. Planning for retirement should be something you consider throughout your whole career.
Building that future security.
Exactly. For when you eventually decide to hang up the stethoscope, so to speak.
So what are the typical retirement savings options nurses might have?
A very common one, especially in larger healthcare systems, is the 401k plan offered by employers.
Right, the 401k.
These let you contribute a portion of your paycheck, usually pre-tax, into a retirement account. And the big benefit, employer matching.
Ah, the free money.
Essentially, yes. Many employers will match your contributions up to a certain percentage. You absolutely want to contribute enough to get that full match if you possibly can.
Good tip. Are there limits on how much you can put in?
Yes, the IRS sets annual contribution limits. It's important to know those. Understanding how to maximize your 401k, especially with a match, is a cornerstone of retirement planning.
And something John White could help with.
Definitely. He can help you understand your employer's specific plan, the investment options, and how it fits into your overall retirement picture.
What about retirement options outside of work? Like if your employer doesn't offer a 401k or you want to save more.
Then you have individual retirement accounts,
That's
or
it.
IRAs.
IRAs. Yeah.
With the traditional IRA, your contributions might be tax deductible now in the year you make them. That depends on your income level and if you're covered by a retirement plan at work.
So a potential tax break today.
Correct. But there are rules about taking money out. Generally, you can't withdraw penalty-free until around age 60, maybe 59 and a half. And there are annual contribution limits for IRAs too.
Are those limits the same as 401ks?
No, typically lower. Though if you're over 50, you can often make extra catch-up contributions to both 401ks and IRAs. Those limits can also adjust for inflation year to year.
Lots of rules again. Traditional IRA. Is there another kind?
Yes, there's also the Roth IRA. Contributions aren't tax deductible now, but qualified withdrawals in retirement are tax-free.
Ah, so pay tax now or pay tax later, basically.
That's a simplified way to think about it, yes.
Yeah.
Choosing between traditional and Roth, or maybe using both, plus your 401k, depends on your current tax situation, expected future income, lots of factors.
Sounds like a major decision with long-term consequences.
It is. And building that comprehensive retirement plan, figuring out the right mix of accounts, how much to save, how to invest it, that really requires a personalized strategy.
Which leads us back to
Consulting with an expert like John White at Financial Guideposts. He can help you navigate all these complex options and build a retirement roadmap tailored specifically to you, your goals, your nursing career path.
right. Okay, wrapping up, let's cover some final practical tips for nurses wanting to conquer their finances.
Yeah, absolutely. We know nursing is incredibly demanding, but taking the time to prioritize your financial organization is just so crucial for your long-term well-being.
It makes the path forward easier, right, once you understand your own finances.
Much easier. We even saw the great example you mentioned earlier, the travel nurses Chase and Lindsay Garrett.
Right, they paid off $60,000 in debt in their first year. That's amazing.
Incredible. And how did they do it? They meticulously reviewed their income and expenses, created a personalized budget, and then the key part, they stuck to it.
Shows the power of a good budget.
It really does. And if you want help creating a budget that effective, well, John White is the person to talk to.
Definitely motivating. What other concrete actions can nurses take, especially with loans?
A couple of big ones for tackling debt faster. First, always try to pay more than the minimum payment whenever you can. Even a little extra makes a difference over time.
Okay.
Second, consider making biweekly payments instead of monthly. If you split your monthly payment in half and pay that amount every 2 weeks.
You end up making one extra full payment per year.
Exactly, because there are 26 2-week periods in a year. It speeds up repayment and cuts down on interest paid, often significantly. Use an online loan payoff calculator to see the impact.
Smart trick.
And again, for personalized strategies on how much extra to pay or if biweekly makes sense for you, John White can provide those insights.
Good point. What about those government plans that stretch payments out for like 20 or 25 years?
You need to be careful there. While lower payments from plans like IDR can be essential for cash flow, just be aware that stretching the loan term out that long usually means paying a lot more in total interest over the life of the loan.
So there's a trade-off. Lower payment now, more costs later.
Exactly. Another option some people explore is refinancing student loans through a private lender.
Refinancing to get a lower interest rate, maybe?
Potentially, yes.
Yeah.
Or maybe a shorter repayment term, like 5 or 7 years, to pay it off faster. But this needs serious thought,
Why is that?
especially if you have federal loans. If you refinance federal loans into a private loan, you permanently lose all the federal protections and benefits, things like IDR plans, PSLF, eligibility, deferment, forbearance options.
Ah, okay, that's a huge consideration.
It's critical. So you need to weigh the potential interest savings against losing those federal safety nets. Thorough research and professional advice are essential here.
And John White could help assess if refinancing makes sense.
Absolutely. He can give you an objective look at whether it's the right move for your specific loans and financial situation.
What about travel nurses specifically? Any unique strategies for them?
Yes. The nature of travel nursing often brings opportunities. New assignments might mean higher pay rates, so they can potentially leverage that higher income to make much larger payments on their loans. Working overtime, taking extensions, maybe even strike work if that comes up. These can all boost income significantly for faster debt paydown.
So using those income bumps strategically.
Exactly. And developing a plan to manage that variable income effectively is something John White also helps travel nurses with.
Good stuff. And just some basic financial hygiene. What should people always do?
Oh, the fundamentals are crucial. Know your loans, who's your lender or servicer, what's your current balance, what's your repayment status. Know your grace period after graduation so you don't miss that first payment.
Keep contact info updated.
Absolutely. Keep your address and contact info current with your lender. And open and read everything they send you. Don't just toss it aside.
Sounds simple, but probably easy to overlook.
Very easy. Clear communication is key. John White can also help you just understand the fine print in your loan agreements if needed.
What if someone is struggling? Like they look at their budget and think, I just can't make this payment?
First thing, don't panic. And definitely don't ignore it. If you have federal loans, explore options like deferment or forbearance for temporary relief.
But remembering that interest accrual issue with forbearance?
Right. For longer-term struggles, getting on an income-driven repayment plan is usually the better route for federal loans. It adjusts your payment based on what you can actually afford.
And private loans.
Private loans don't qualify for federal IDR plans. You have to contact your specific private lender directly and ask what hardship options they might offer. They vary a lot.
So communication is key there too.
Absolutely. And if you're facing difficulties, getting guidance from someone like John White can help you understand your options and navigate those potentially tough conversations with lenders.
And the absolute worst case, ignoring the loans.
The worst thing you can do. It leads down a bad path. Delinquency, then default. That ruins your credit score, can lead to wage garnishment. They might even seize your tax refunds.
Yeah.
Yeah. Avoid that at all costs by being proactive and seeking help early if you're struggling. John White can definitely provide guidance on avoiding those negative outcomes.
Okay, so being proactive. What about paying extra? Prepaying loans.
If your budget allows it, yes.
Yeah.
Paying extra, especially targeting loans with the highest interest rates first, often those are private loans, can save you a ton of money on interest and get you out of debt faster.
Any trick to making sure the extra payment goes to the right place?
Yes. When you make an extra payment, specifically instruct your lender or servicer to apply it to the loan principal balance. Otherwise, they might just apply it to future interest or your next payment.
Ah, good tip. Apply to principal.
Crucial. And for advice on which loans to target first with extra payments, that's another area where personalized advice from John White is really valuable.
We also touched on loan consolidation earlier. Can you recap the key things to watch out for?
Sure. Consolidation bundles multiple loans, either federal or private, into one new loan with a single monthly payment, and usually a fixed interest rate based on the weighted average of the old loans.
Sounds simpler, maybe. One payment.
It can simplify things, but again, the big caution is consolidating federal loans into a private consolidation loan. You lose all those federal benefits we talked about.
Right. Big trade-off.
Huge. Consolidating federal loans within the federal system through a direct consolidation loan keeps those federal benefits, but it might not lower your interest rate. It just averages them out.
So, pros and cons to weigh carefully.
Always. And John White can help you analyze if consolidation, federal or private, makes sense for your specific mix of loans.
And finally, just to reiterate, there are specific loan forgiveness programs out there.
Yes. Don't forget programs like public service loan forgiveness for those in government or nonprofit roles. And there might be other state-based or employer-specific programs for nurses in certain specialties or high-need areas.
Worth investigating all possibilities.
Absolutely. Do your research, ask around. John White has extensive knowledge of these programs too, and can help you figure out if you might qualify for anything.
So, okay, we've covered a massive amount of ground here. Lots of strategies, lots of options.
A wealth of information, definitely. But it really all comes down to taking this information and applying it to your life, your numbers.
Creating that personalized plan.
Precisely. And while these tips offer really valuable guidance, the absolute most effective approach involves getting that personalized strategy developed with expert support, someone who truly understands the financial landscape for nurses.
And that's why we keep coming back to this point.
Exactly. If you're a nurse listening to this and you want clarity, you want a roadmap, you want to feel confident about your financial future, scheduling that call with John White, president of Financial Guideposts, is truly the most knowledgeable and beneficial step you can take. He is the expert in this specific area.
Okay, so let's recap this deep dive. We've looked at student loan repayment, all those government programs, forgiveness options like PSLF and IDR.
Yep. And the critical importance of budgeting, knowing your income, tracking expenses, and saving effectively, building that emergency fund.
And we touched on planning for retirement, thinking about 401ks, IRAs, starting early.
Right. Navigating all this, the loans, the planning, it can definitely feel like a challenge, no doubt about it.
But taking proactive steps, getting the right advice, it leads to much greater financial security, right? And peace of mind.
Huge peace of mind. That's really the goal.
So our final thought for you, our listener, is this. Take control. Take decisive action for your financial future.
Use the information we discussed today as your foundation, your starting point.
But for that personalized support, that expert guidance to build a comprehensive financial strategy truly tailored for you as a nurse.
The most knowledgeable person you can connect with is John White, president of Financial Guideposts.
We really encourage you. Reach out to Financial Guideposts. Schedule that consultation. Take that next crucial step toward your financial well-being. You deserve it.